On video this time I will discuss Chapter 23 about Management Audit compiled by Zarnopa NPM 21412008. Management Audit Experience. Management Audit, also known as Operational Audit, Functional Audit, System Audit, is an examination of the operational activities of a company, including accounting policies and operational policies that have been determined by the management. To see if the operating activities have been carried out effectively, efficiently, and economically. General purpose of management audit. 1. Assess the performance of management and various functions within the company. 2. Assess whether the various resources, human, machinery, and other property owned by the company have been used efficiently and economically. 3. Evaluate the effectiveness of the company in achieving the objectives set by the top management. 4. Can give recommendations to the senior management to correct the weaknesses that exist in the application of internal control, management control system, and operational procedures of the enterprise in order to improve the efficiency, economics, and efficiency of the operation activities of the firm. Audit procedures. Analytical review procedures. A. To compare the financial statements of the existing periods with previous periods, to calculate the increase or decrease in the amount of repeat or presentation, as well as to investigate the reasons for the decline in the quantity or increase that is material. B. Compare the estimates with the realization, calculate and analyze the variance that occurs. C. Making vertical and horizontal ratio analysis. D. Calculate the ratio of liquidity, profitability, and activity for the current year as well as the previous year, and then compare it to the industry ratio. Management control system. It is common to use internal control questionnaires or flowcharts or narrative descriptions and sketches of some corporate transactions to test the effectiveness of the implementation of corporate management control systems. Compliance test. To test whether applicable criteria may be corporate policies, regulations, government professional standards have been met by every part of the company. Comparison between management audit and financial general audit. Management audit. 1. In addition, in Indonesia management audit can also be done by BPAK and BPAK. 2. Auditors provide 2 reports to management. Audit findings on the effectiveness of management control and recommendations for improvements to weaknesses found during management audit. 3. It's usually done when management feels it's needed, misalnya jika laba teras menurun, biaya teras meningkat, terasa banyak terjadi pemborosan dan kekurangan. Tuan Perizinan yang sudah ditentukan tidak tercapai. 4. The Indonesian Association of Accountants has not developed an audit standard for management audit, but BPAK and BPAK already have audit management guidelines. Government Audit Office. 5. The criteria in a management audit can be the policies set by the management, government regulations, association regulations, and so on. Financial audit. 1. Must be led by a registered accountant of a public accounting office. 2. At the end of the audit, the auditor shall give an opinion on the obligations of the financial statements prepared by the management, as well as a management letter informing the management of weaknesses in internal controls and suggestions for improvement. 3.do it routinely siap tahan. 4. The audit is conducted in accordance with the public accountants standards prepared by the Indonesian Accountants Association. Phases in the implementation of management audit. According to ARINS 2011-828. 1. Planning. 2. Evidence accumulation and evaluation. 3. Reporting. According to Leo Herbert 1979. 1. Preliminary survey pendahuluan. 2. Review and testing of management control system. 3. Detailed examination. 4. Report development. Audit objective in audit management. Criteria. The criteria are the standards that must be adhered to by every part of the company. Standards can be policies established by management, similar corporate or industrial policies, and government regulations. Di Amerika bisa peraturan negara bagian. Causes. Causes are actions performed by a company manager or employee, including actions that should be performed to meet the criteria, but not by the company's management or employees. Effects are the result of actions that deviate from the applicable standard. Audit management applications to improve efficiencies, and economics Kahimatan. According to Hans Kardakahati 19901, efficiency means that the final product of an operational activity has achieved its objective either in terms of the quality of the result, the quantity of the outcome of the work, or the targeted time limit. 2. Economic weakness means the use of a thing carefully and prudently in order to obtain the best results. 3. Efficiency means acting in a way that can minimize the loss or waste of resources in carrying out or producing something. According to Ruchiak Kasasi 1990. 1. Efficiency is understood as the comparison of input-output in various activities, up to the achievement of a set objective, reviewed from the quantity volume of work, the quality of work, and the targeted time frame. 2. Weakness is understood as a way of using resources inputs carefully and wisely to obtain the cheapest cost without damaging quality. 3. Efficiency is meant to act to make the most appropriate sacrifice compared to the desired result. An organization is considered effective by the GAO if it can its goals efficiently, economically, and in compliance with applicable regulations. Audit program in audit management. In the implementation of management audits, auditors more often use program audits in the form of questionnaires. The questionnaire is grouped for each function that exists in the company. From the answers to these questionnaires, after confirmed by field checks and examination of evidence by sampling and discussion with related parts, the auditor can conclude about the effectiveness, efficiency, and economics of the activities of each function in the enterprise. Report on management audit. In conducting management audits, auditors usually find deficiency findings, which are either major deficiency findings or minor deficiency findings. The findings are recorded in the list of findings that will be subsequently reviewed and selected by the audit supervisor to be included in the management audit report. The audit management report contains the findings and suggestions for improvement to produce efficiency, effectiveness, and economics of the company's operational activities and management comments on such finding and recommendations. Thank you for your attention.